Hey, what is going on, my friends, and welcome back to another video on the My Stock Journey channel. Today, as you can tell by the title, we are going over how to invest either your first $1,000 or maybe you've kind of invested a little bit and you want to invest $1,000, but you're not exactly sure where to put it. And so what I wanted to kind of do today was, if you're a beginner, you say you have $100, $1,000, $10,000, I kind of wanted to give a little small strategy that I've used in the past to invest that money in little side routes in which you can take your money and invest them based on your level of risk, your level of reward to risk, opportunity cost, and everything like that. So today pretty much we'll go over like one big strategy, and like I said, I'll break it down into 4 little subcategories on which you can invest your money. Kind of make it a little bit different than the other. I feel like a lot of YouTube videos that I watch are too predetermined in a sense that they say, this is how you should invest your money, and that's it. This is the right way, and this is the safest way, or this is the most risky but safe, whatever. And with that being said, I kind of wanted to just create a video in which I give options for you guys, say if you're newer, because I do have a good bit of new people coming on my channel, and I do want to make sure that I'm producing content that will apply to you all as well. And so with that being said, I wanted to make sure that I gave you options, and based off you personally, you get to make your choice. Because look, this is not financial advice. These are just options in which I've created and kind of come up with in my head, and which made a little bit more sense. And so with that being said, we'll hop straight into the video. If you do like this video, don't forget to drop that like, hit the subscribe button if you are new to the channel, and if you do enjoy this video. If you have any future suggestions and feedback for any future videos, or anything you'd like to see, any questions you have for me, and if you want me to elaborate on anything that I say in this video, definitely drop it in the comment section. I pretty much reply it to every single person in the comments, even the bots, even though they're annoying. And we're gonna get straight to the video. So basically what I want to do is break this up by percentages. So the overall different, ways that you can invest, I'm going to create one big portfolio idea. Basically, there's 4 different style of stocks that in my head you can invest in right now. That makes sense. So I'm going to say you can invest 25% into this one, this one, this one, and this one, and create one big portfolio. What you can also do is say if that 25% just applies to you, and you feel like you only want to invest into that 25%, hey, make it 100% of your portfolio, right? Or you like 2 of these different styles, 50-50 on them, right? But what I'm going to do is just create this portfolio. Like I said, just 4 different styles, 100% of that, chop it into 4, and 25% into each. So the very first one is going to be investing into established, world-changing technology stocks that, are kind of running this new evolution, running this technological advancement of the world, And the reason I say that is because technology is obviously taking over the world. The world that we lived in 50 years ago and the world that we live in today is different due to technology. And so with that being said, I feel like it's a very good investment to make now, to invest in these stocks that are taking over the little aspects of the technological world. Maybe not running the entire thing, but each one has their own little piece. And I feel like that's a very good investment. Some of these stocks do include some like Microsoft, Amazon, Apple, etc. The reason I say that these are going to be good investments is because you look at Amazon, for instance. Amazon is by far, in my opinion, the leading producer, in the forefront of the online shopping race. They're doing things that no other company is doing. They're producing numbers bigger than any other company, and they are just doing absolutely amazing things. And I do see them progressing into the future with these, this advantage. And I think that they're going to continue to expand, reinvest money into themselves, and create an empire in the online shopping industry that is going to continue to run the world. And that's what I mean. Amazon, Alibaba, those types of stocks and companies, they own their own little piece of the technological world. They own their piece of online shopping. Like I said, 50 years ago the world was different. You had to go to the store to buy these different things. You had to go personally there. You couldn't just order it online, right? Well, now with technology advancing and evolving, you can order things online. And so that means that Amazon has got on top of that, and Amazon has created their own little method in which that they will keep on going throughout the future and be in the lead. And so that being said, those style of stocks are definitely ones that I would say put a little bit of your portfolio into, like 25%. And like I said, Amazon, Microsoft, Apple, they all have their own little piece. You look at Apple, and almost every single person I know either has or has had at least one Apple product in their life at my age. And that should say something. That should say they are way ahead of the game. And it's just stuff like that. They own a piece of the phone, phone, laptop, iPad, tablet world. They own their own little piece of that. And so with that being said, that's another example of which a company I believe would be a very good investment to put a piece of your investment portfolio into. Next up, now this is a very, very prime example of a style of stock in which a person may want to invest all of their money in. Like I said earlier, you can either create a portfolio with that has a piece of each one of these styles, or just fully forward into each one, one of these style of stocks. And with this one, this is going to be dividend paying companies, but not only dividend paying companies, established dividend paying companies. And what's the difference? Well, the difference is that there's some companies that have been paying dividends for 5 years and 50 years. We want to be looking at dividend paying companies that have proven that they can stand the test of time and continue paying these dividends, not have to cut them, but continue to grow them over the years, almost in any situation that is given to us as an investor. Or as a company or as society in general, we want them to be able to push through it, have enough, cash, have the right balance sheets, which will allow them to continue to pay those dividends. So whenever you look at these different companies, you're really want to dig deep into where their financials are, how much debt they are, how much they're in, how much cash they're sitting on, and the safety of their dividends, because you don't want to own a stock that your main focus of owning them is that they pay dividends and then they cut their dividends, because at that point you might be out of luck. They might not be a stock worth owning, and you could begin to lose money very, very fast. So we have to make sure that we are, investing in dividend paying stocks that are going to pay in the long run. Because whenever you look at these dividends are also, extra. I consider them to be a little bit extra, because I personally invest in dividend stocks that are growing, dividend growth stocks. And what that means is the value of the stock is going to increase over time, meaning I'm going to, make profits from the increase of the value, but also I'm going to be getting paid dividends as well. So if you look at a stock, if it grows 5% every year and pays 5% in dividends, I'm getting 10% returns every single year. Now, of course, I have to pay taxes and I have to do that. But the thing about it is that's extra money that you're making with the growth of the stock. There's lots of people out here who are simply strictly dividend investors. They only invest their money into dividend paying companies. I'm also one of them. Every single stock that I own pays dividends, and the majority of them, except for two, pay at least 4 to 6%. That's kind of like my range of safety. But also I see long-term growth potential in these stocks as well, because with that, it comes with the growth. I'm making a lot of money from the value of these stocks going up. Some of these stocks I bought were 50% off whenever this, big pandemic began. But also when the rise of that 50% also comes these dividends, and it's like extra exponential growth. That compounding happens much faster, and it is an absolutely amazing style of stock to want to invest at least a little bit, if not all of your money in. Now, with that being said, there will be some of these dividend paying stocks that will maybe dip into other styles. We previously talked about some of these established technological companies. Well, if you look at Apple pays a dividend. So with that being said, you could invest in an Apple and fulfill two of these different things. You could have a little bit of money in a stock that's, riding the wave of technological evolution, as well as it pays dividends. It's kind of like a best of both worlds. So with that being said, this one is a little bit more broad. There's going to be different companies in different sectors that will pay out those dividends. But like I said, you really want to make sure you are investing into companies that will be safe in the long run. There's different companies that will pay dividends, and you want to have faith that they will continue to pay those dividends over time. Some good examples are Coca-Cola, AT&T, McDonald's, Apple. Microsoft pays a dividend, I think it's like 1.16. Some ones that I have, Store Capital, Main Street Capital pays dividends every single month, Stag Industrial, Aflac, and the list goes on and on and on. Each one pays their own dividend and the percentage is based off of what the company feels is safe for them and that they feel like they can maintain over the long run. You want to look for companies that are going to expand their dividends. So maybe one year they pay 1%. You want the next year, maybe they pay 1.8%, 1.7%, and it continues to rise over time. So that compounding compounds itself. And so with that being said, dividend investing is a very, very strong method in which you want to invest maybe at least another 25% of your money, another $250 out of that $1,000 to be able to go ahead and have some type of stability and safety in your portfolio. So next up, this is one that kind of once again will apply to the dividend investing side, but it is another one in its own that I believe I honestly, this is the only style of stock, maybe this one of two, that I believe everyone should probably want a little bit of. and that's real estate stocks. Well, why do I say that? Well, it's kind of a given that we will always have real estate. There will always be land, and there will always be people paying for that land. The longer that time goes, the more land that will be available to be being paid for, rented on, leased on, owned, etc. And so with that being said, these companies that own large amounts of properties and that people pay rent to them because, say a company owns 3,000 properties, yeah, they invest money to pay for that property, but they're getting back rent and people are going to be paying them. And over time, as they invest all this money into these different properties, those properties are then paying them back. Well, they take their profits and, they create a company, and that's how they're profitable. They have their own portfolios, and then you can go ahead and then add that company into your portfolio. So it's almost like you have a piece of every one of those properties. Now, small piece it is, but a piece it is. And so with that being said, I believe that real estate stocks are another very, very strong buy. I feel like real estate stocks are always going to be around. And another very interesting thing about real estate stocks is that the majority of them pay dividends. Many of the most popular dividend paying stocks actually happen to be real estate stocks. And the thing about it is almost every real estate stock pays dividends. So they're called REITs. REITs is a real estate investment trust in which basically, like I explained earlier, they have a portfolio consumed of nothing but owning properties, single tenant, multi-tenant, and maybe a mall, maybe a movie theater, it could be all the way to a gym. And they'll have these different things in which their tenants are paying rent to them, and that's how they generate their income. The majority of these stocks, these REITs, are going to pay the majority of their profits out as dividends because that's just kind of how they are. And you can do a little bit more research on it because I don't want to go too in depth on why their payout ratios are so high. But if you want to do that research, it definitely would benefit you to understand that whenever you go and check out a payout ratio, you see a 95%, and you're like, whoa, they pay almost all their profits. I don't want to invest in that. It's totally fine. It's okay. So I will give you guys 3 different examples, 3 very, very strong REITs, in my opinion, that I think majority of people would agree are of the best. And that'll be Store Capital, Realty Income, and Stag Industrial. Each one is a little bit different in the approach that they take. Some like Stag Industrial kind of go for more single tenants. Realty Income is actually a very interesting one. They own over, I do believe, maybe you want to double check my numbers, that they own over 3,000 different properties. One good thing about them that kind of applies to our most previous style of stock is that they do pay dividends every single month, which is very attractive to me. I'm actually very, very, very strong and bullish on this stock, and I'm looking for the perfect entry. I think that I'm going to enter, honestly, if not this week, next week, and I'm going to get in, maybe get 10, 15 shares and start to, build that piece of my portfolio because it is a very, very strong stock. And once again, I believe that real estate is always going to be around, and there's going to be, companies and these businesses that are going to benefit from that everlasting real estate. And so why not as an investor go ahead and get our piece and, take our own stake and all these pieces of real estate. So last but not least, this is actually another one that I know many people do on its own. And I do believe that this one could be very beneficial to have in your portfolio. So if you only have $1,000 and you want some type of stability, you could go ahead and look into investing into ETFs, or an exchange traded fund. Basically what this is it tracks or holds a whole bunch of different stocks, tens, dozens, even sometimes hundreds of different stocks, in which when you invest into this ETF, it then redistributes your money into a very broad and very varietized market of stocks, in which, makes it very safe. A lot of the safest investments you can make will be in the ETF, simply for the fact that your money is put into many different places. If you invest in companies or trackers such as VOO, your money will then be, invested into over 500 different companies, 500 of the biggest companies in the country. And so with that being said, it's a very safe route to go, because if you invest your money into an individual stock, such as, say, I take my money and I fully go into Store Capital, right? If Store Capital goes down and say they go bankrupt or something really bad happens to them, all of my money goes away if I don't sell it. Whereas if you invest into an ETF that, say, tracks 500 different stocks, if only one of those stocks or one of those companies goes down, there's still 499 that are going to be able to kind of balance it out and maintain it. The thing about ETFs is that generally the returns are not as high, meaning that it's a little bit safer, yet the reward isn't as much. Low risk, low reward. And so with that being said, it is definitely a way that if you're a little bit more conservative with your money, or, you don't really want to have to worry about it too much, you just want to invest your money, every single month, week, day, bi-weekly, you know, every year, whatever. You want to just invest and never have to look at it again. I would definitely consider looking at an ETF simply for the fact that it's going to be a little bit more of a passive way to invest your money. You don't have to worry too much about, you know, what all's going on in the market. You just kind of understand market's up today, market's down today, and that's typically what your ETF is going to do. On top of that, there are ETFs that track certain sectors. There are ETFs that track certain, you know, different types of stocks. It doesn't necessarily have to be 500 of the biggest stocks in the country. It can be an ETF like Jets, which typically tracks only airline stocks. And so maybe you're a type of person, you want to invest, you know, like right now, right? We all know that with the virus and the pandemic and everything going on at the moment, that airline stocks have taken a lot of damage. But maybe you don't want to just invest your money into, you know, Southwest Airlines or Delta or Spirit, because you're like, well, I don't know exactly which one I want to invest in, because what if this one goes down and I lose all my money? That's perfectly understandable, you know? Maybe you don't have the time to do as much research, but you know that you want to get in and you have a very general understanding of the market. You can look at an ETF such as Jets, and which basically that's one that I own itself, in which basically it just tracks airline stocks, meaning that when airline stocks are doing good, Jets is doing good. When they're doing bad, Jets is doing bad. And if you want to invest in airline stocks, that's a good method to use if you want to take more of a conservative approach. So I know a lot of people just, you know, use that for, you know, retirement accounts. Their IRAs do invest into ETFs, bonds, and stuff like that. A lot of more safer options. And so it can definitely be worth considering putting like $250 of that $1,000 also into ETFs to have more of an anchor and a stable sector to invest your money in. I hope you guys did enjoy this type of video. I definitely do enjoy just giving back to the people who watch my videos. I know a lot of you message me, you know, a lot of you have me on Instagram, and you message me like, hey man, I have $100, I want to invest it, but I don't know what to do with it. I have $1,000. I know I want to invest. I see your videos talking about how good investing can be for you mentally, spiritually, physically, and for your future, but I don't know what to invest it in. So I was like, maybe I'll go ahead and just kind of give my opinion and my feedback and give people different options on how they can invest their money, because I've always been the type of person where, call me hard-headed if you want, I don't like really being told what to do. I guess I feel like I've always rather have options and be able to choose those options based on the type of person I am, because me and the person watching right now, we might think totally different. You might be, hey man, I got $1,000 and I want to full send it. I want to put it into one stock and I'm gonna YOLO it all the way up to the top, and if I lose it all, boom, whatever, I'm gonna go to work and make it back. I'm not like that, but you might be. And what I wanted to do is give you guys a bunch of different options and different methods in which you can pick your stocks that you would want to invest. And if not, if you want to just have a very varietized portfolio, you can take one stock from each one of these style of stocks that I spoke about today and create your own portfolio. Once again, I am not a financial advisor. This is not financial advice. I'm kind of just giving my opinion on how I feel about it and what I think would be a good idea, or, you know, good methods in which you can invest your first $1,000. Thank you guys for watching. I hope you did enjoy this video. Once again, drop a like if you did enjoy the video. If you made it this far, please let me know down in the comment sections, and while you're there, give me feedback and give me some suggestions for future videos. Also subscribe if you're new to the channel, and I'll see you next time. Peace.